Dow Jones Industrials up 145 points. I do want to let you know the high of the session was a gain of 190. S&P up 28. The Nasdaq jumping 130 points. Russell punching its way into the red. The Dow also getting a bump on the news that consumer giant and Dow component J&J is pulling a GE. By the way, so's Toshiba. All three announcing this week they will be breaking up their businesses. Johnson & Johnson is on the move higher by 1.3% after it announced plans this morning that it will spin off its consumer products division, which includes brands like Tylenol, Aveeno, Neutrogena, and more, in order to focus on the pharmaceutical and medical devices arm of the business. Toshiba following suit by spinning off into three parts: infrastructure, semiconductors, and devices. Toshiba up 2.7%. That comes after increasing pressure from activist investors in the wake of Toshiba's accounting scandal back in 2015. And leading the breakups was General Electric earlier this week, which said it will split into three publicly traded companies that will focus on aviation, healthcare, and energy sector. GE up 0.33% right now. Let's get to our floor show traders. Kenny Polcari and George Ball. Kenny, J&J and GE are widely held names. A lot of our viewers have them in their portfolios. Are these splits and spinoffs a positive for investors from where you sit?
I think they are, because I think, in Johnson & Johnson's case, they're going to take that consumer brand and take it away from the drug side. And I think that the consumer side is under that threat of those continued court cases with the talcum powder and all that stuff. And so I think the investor in Johnson & Johnson is going to do very well. I don't think they should bail yet. I think they should wait. And then when it splits, they're going to decide, do they want to hold the other half, or do they want to get rid of it and then move into something else? Because currently they own it. They bought it knowing that whole situation exists. So there's no reason to panic at the moment. But I do think it's a net benefit for the long-term investor, for sure.
George, you're a long-term investor, and you're a smart investor. Knowing now that A, we're having these major companies split up, but also B, this news that, yes, the Fed tapering has begun. We just saw it on the New York Fed website, releasing monthly bond buying schedule. It does show the reduction of asset purchases. This, of course, was widely telegraphed, but we're watching very closely any kind of reaction. How do you like equities, knowing that maybe, possibly, this might be on a faster track?
The Fed did a better job of telegraphing what it announced today than Metro-Goldman-Mayer did in previewing some of its better movies. Everybody knew what was going to happen, and they did a great job of keeping the market from panicking from there being a surprise element that was harmful. The corporate breakups, I guess, remember the old song, Liz? Breaking up is hard to do. Investors like pure plays. Johnson & Johnson's consumer products division is a stable but fairly boring business. The pharma and pharma development business has much more excitement and will sell at a higher multiple. So breaking into two parts for Toshiba, for GE, will let investors get the pure play that they want. And that probably is going to be advantageous in the aggregate for the combined element stock prices.
Yeah. George, when you're looking at some of your favorite names, as they have run up, have you been taking some money off the table?
I've been redeploying money, Liz. The bias in the market is still to the upside. People can say it's too speculative, prices are too high, but day to day there's still more of a opportunity in the market than there is risk. Risk will come, but probably not yet. So I've been redeploying out of the big old FANG stocks. They're tired. They're bulls, but they're tired bulls, and more into so much smaller, still tech-centric companies. Figs would be one of them. It's a company that manufactures high-quality, comfortable, fashion-centric scrubs for professionals in the medical business. That's a business with a lot of future, huge upside, where some of the old tech names, I think, are sort of reaching the sky's the limit.
Yeah, Kenny, big news, obviously. Tesla's at the bottom of the S&P right now. So as we look at names such as that, it's not the worst thing in the world, considering it has had an incredible run up there. But what are the other names that you're looking at right now that tell you flashing red signals, stay away, flashing green signals, come on aboard?
Well, so very much to what he just said is that the big old FANG names are the ones that are getting tired. So therefore, you're not going to get out of them, but you are going to rebalance them, right? If you want to stay in tech, and I do, the electric vehicle sector, separate from Tesla. Look what's happened to Rivian. Look what's happening even to Ford and General Motors. They are becoming these electric vehicle companies, right? In addition, cybersecurity names in the tech space are always a place to be, especially going forward. I think that's going to become even more important. So there's plenty of opportunity in tech. You don't have to necessarily, because you feel the market's a little bit toppy, blow out of everything you have in tech at all, not by any stretch.
Yeah, well, George says there's some tired bulls in there, but some still have a lot of energy left in the tank. George, Kenny, great to have you both on this Friday.